This is Justin AMZN for Monday, January 13th, 2020. Take a look at the 5 minute, and we're just going to look at two setups today, one bearish, one bullish, and I'm going to try and draw a straight line. Pretty much, yeah, that's not straight at all. Pretty much right here. It's a little shaky. I can't, okay. We're going with the other sketching because I really can't draw a straight line. Oops, not that one. Sorry about this. Okay. This range is this island thing. I'm calling it an island, but it's just two gaps. Well, we traded right back up into that range today, right at the open. Of course, that's going to be resistance. Like, how much more obvious can that resistance be? So we ran up into there. People were buying. And then the bears came in and pushed it almost all the way back down to 1880.05. And then, like I said, I wanted it to get a bounce from there. It bounced from there. Yes, it did not exactly hit. That's right. But it got close enough to trade it really, really nicely. And then look where we ended up. We came right back up to this range. So, yeah. Actually, you know what I'm going to do? I'm going to see if it'll let me draw this exact. It's going to let me know. Okay. I'll have to play around with this a little bit more. I'm going to extend it to the right for right now. And we'll see how long that acts as resistance. Just this range, We'll see what we get out of this. Because, these gaps are really just, they're really nice places to look for. I mean, we were right back into it today, seeing that as some sort of, pivoting range, 3 times, once, twice, third time. I guess this is more times in here, but anyway, let's take a look first at the puts. Right at the open, we ran up on the 5 minute, which means we were dropping the value of the put. It came right into the 10 by 9 range, and into this range, you really could have been buying puts 10 by 9, and possibly even over here. This one was at 910. That was right here. That's crazy. The put was worth a little bit more right here than right here. I mean, that big of a move already. So anyway, back to this. 10 by 9 would have been great. Even this 11 by 10, it did some sort of curve here. And then exiting near 1880, you would have only gotten a couple R out of this. If you got in 10 by 9, you're getting out at 12, just getting 2, maybe 3 R at 13 there. And then again here, getting an 11 by 10, that goes up to 13 again, so yeah, it didn't really move that great. I mean, it's a Monday, right? So it doesn't move, as much as a Friday moves like this. But anyway, and then down here, looking for this to buy, looking for a buy down here, looking for a bounce. If you did not wait for it to pull all the way back, that's okay. After it, so this is that was the 1875 put and came into the $10 range. And then the 1900 call also came into the $10 range at the very low of this hammer on the option. Once this hammer came in, this was about $1 range. After that hammer came in, that was this candle right at 935 is this candle at 935. Okay, and then you get an inside candle, and then you start to get a bounce, and that's a nice Morningstar reversal. The whole time this is starting to rally, you get a couple hammers, small hammers in here, inverted hammer, it just keeps going up. All through this, you come down to 10, probably not a good place to get in, or you're not looking to get in right at 10 unless you're stalking the 1900 call, which you can totally do. More likely, you saw that it was pulling back, almost touched 1880, didn't get in on this candle. You're looking to get in over here, somewhere over here, after it starts to bounce, Morningstar reversal kind of thing. So maybe you're getting in 11 by 10 instead. And I think that's reasonable just because we're kind of going sideways through here, and we don't really push back down to 10 at all. Not even below 10.50. So it seems like the $10 price is fairly safe. And that's actually a good place to be stopped out if it's going to, roll over. Well, it didn't. It bounced. So getting in here, ideally 10 by 9, but I think more likely would be 11 by 10. And then from there, you're riding it back up, all the way back up to that range. And the option price at the high of the open was much higher than we got any other point of the day. But you're looking at this price on the stock, and this price on the stock, and this time of day, you're going to be looking to just exit in here. So let's say you got in at 11, stop at 10, and you get out at 15 because you're in that range. That's a nice 4-hour trade. And then we did end up rolling over later in the day. So we came back down to the $10 price here on the 1900 call. So getting in bullish here, getting out here, or getting in bearish here, or even here, and getting out down here. Those are the two main trades today. Even a little bit later here, this started to roll over a little bit from the same area, or a little bit lower than it was doing it here. It wasn't quite the same kind of gap, but you did have a similar candle like this one, this hammer, and it was, I think, was a higher high. Yeah, slightly higher high, higher low. You kind of got a higher high, higher low, high wave candle, and then that started to roll over. So you had some bullish candles here that couldn't hold up, and those actually rolled over. So I guess that could have been another area to look for a rollover. The 1875 put wasn't great later in the day. I mean, very little volume here. Let's see if 1885, just because you're nearest the money, it's a little better volume, but not great. Oops. Let's see, 1890. What was this doing? A little better. All right. It's going to be more expensive, but let's just look at 1900. Let's see what's going on there. Yeah, $1,600. Yeah, I don't think I would have been setting up something like that. So the rollover, this rollover, I think would have been a little bit harder to trade just because the options didn't cooperate too well. And part of it is just because it's a Monday. So let's see. I don't think I checked 1880. What was 1880 doing? Went from $8. Went from 8 up to 10. At what time? That would have been probably 1:50, probably 2 o'clock. So 2 o'clock. Oh yeah, we're way over here. So it only went from 9 to 10, and then you're holding through a pullback, which is kind of crazy. It actually lost value here. So it seemed like, the market was expecting this to roll back down, and so the premium got baked up here, lost premium as it, the puts lost premium as it went to here, and then ultimately got a little more premium back as it dropped a few bucks, more than a few bucks, and just didn't really gain so much. So yeah, this kind of V was the best place to be trading, and then the rest of the day was not really cooperating. So take a step back and look at what we've done. We've been in this range for all this no man's land here. We've been in this range. We're retesting. We've had 4 bearish candles in a row after having 5 bullish candles in a row. So this is just a rest. We've been in a much tighter range. Actually, I take that back. We've been in a similar range to these, but I think we've gapped. No, we gapped here too. We're just stuck going sideways here. We're just resting after this big move up so quickly. We're just resting. And I think we're really getting ready for something bigger to happen. And we've done that from this range before. We did it here. We did do it here. We pushed a little higher and then came back in and really broke down. Let's see if we go back a little further. We've been in this range, right up here, pushed up a little bit, came back down. So yeah, we've been in this range going sideways before. And I think we have a little longer to go sideways. If we get a nice bullish gap up on Amazon, it could really run. We had that 2 days ago, Thursday last week, and it did not go. I mean, it pushed up a little bit, but it did not go like really run. And then we had all these gap downs that faded. So these ones were trapping bears, and these ones have been trapping bulls. And I think the market's just trying to, or Amazon's just trying to trap everybody out, and then we'll get moving. So even today, really having this V bottom here and then just go sideways, it sucked a lot of people in both directions. And so, let's see if we can get a gap above this range. We, with the bearishness that we've had today and yesterday, I think if we can get a gap up and open up above here, at least above 1900, maybe even above 1907, 1908. Let's see, what was the high here? Yeah, 1907. So we need to clear these gaps, really. I think that'd be a big deal. This one is still open. This one closed, with the opening candle here. So this is the next one in contention. We'll see if we can push up into 1900 or get a gap up there tomorrow. And then, look to see if we'll hold some bullishness. But right now, this range is setting up as a really nice resistance. And we'll see if that holds any longer, or if we're ready to do a bigger double bottom sort of thing and get going. There's a couple different ways you could draw this as a bit of a larger double bottom. Let me see if I can sketch this way. You could go, I'm sorry, I bumped something. All right, you can go like this as a double bottom. You could also go like this as a double bottom, with that being, or this being, a bigger neckline retest like that. But yeah, if you did this one, then this is, this is the place that we need to get above. We really need to get going up here, retest, and then keep going. So that's kind of what I'm looking for to happen. I just don't know if we're ready to do that. We're making some lower highs, some lower lows. No, yesterday, Thursday was a higher low. So yeah, the only thing is really lower highs so far. We'll see if we can break above that, because that actually looks like a pretty decent slope right now too. Let me see if I can sketch this one. Oops, drawing tool. If I just kind of connect these, just seeing what this does. So we're kind of following a bit of a downtrend here. So let's see what's the better fit of this. Maybe like that. Let's see here. I kind of like that, because you have this point, that poked above, we come right back down. And then you have the upper wicks here. I kind of like this angle. So I'm gonna leave this angle on here, and I'll extend this to the right as well. And we'll see if we have a little more in this range. If tomorrow keeps us in this range, again, between 1800 and really in the 1880s. Sorry, not 1800, 1880. If we can stay in the 1880s, and then that just makes a bigger triangle here for us to pop out of, bullish or bearish. But if we can get a move up above this downtrend line, we may get stuck right in here and have another small candle. And then we may be able to draw a bit of a increasing slope. I mean, back to this one, possibly, or back to this. Nah, it doesn't really fit as well. Okay, we're going to look to see what we can do with this line. If we're going to get above this and then get above this, that'll be two kind of resistances right now that we're holding below. And if we can get above these, then look out, because we got more bullishness to come. So, all right, I hope this helps. This is Justin AMZN. Thanks.